Well, hi there. Welcome to Markets Tomorrow right here on ET Now. And we have seen the markets scale back quite a bit from the lows in the session. In fact, closing just shy of 7,500. What you see on the screen is perhaps indicating a flat close. But if you look at the intraday graph, you will see how the market has actually come off the day's lows to close at 7,500, largely being led by cues from Europe, largely in anticipation that the Fed would sound accommodative in its policy stance overnight. So there was late hour buying and short covering led rally for the indices. We'll talk about that and more with our battery of guests lined up on the show. Over the course of the next 30 minutes, we will be touching base with Harsha Upadhyay, Kotak AMC, Mayuresh Joshi, Fund Manager, Angel Broking, and Mitesh Thakkar, a technical strategist at miteshthakkar.com, to give us strategies to approach trade tomorrow. To the top stories in the session today, and it was really about the index recovering and closing at 7,500 off the day's lows. However, the Nifty still faces resistance between 7,500 to 7,600. The main resistance zone has shifted to 7,600, with call activity there being the most brisk. In terms of individual counters and stock stories, you had Kotak coming out on Lupin saying that they could see a 10% downgrade of its FY17 consensus EPS estimates due to lower sales from its diabetes drug, and that weighed on the stock's performance. Aside of that, CLSA, another big downgrade coming in on Eicher Motors to underperform, citing limited upside in the stock over the course of the next 3 years because the stock has drawn up so mightily over the last two. And then, of course, news brewing on Deal Street, and Vardhaman Textiles spoke to ET Now on the story that got reported in the Economic Times in today's edition, talking about their interest in Alok Industries and they competing with a clutch of private equity players to buy that business out. Vardhaman Textiles tells us that they have submitted, indeed, the expression of interest for Alok Industries. On the other hand, there was also, during the last hour of trade, a note that Moody's issued on ICICI Bank saying that the core operating profit of the bank was seen improving and that the bank was able to absorb higher credit costs, which would help in its business going forward. That was well capitalized. ICICI Bank closed up 2% in the session. And then Anu Pharma, the stock that reacted to the EU regulators' a certificate of suspension coming in for 3 drugs in Europe yesterday, because of which it tanked about 10%. It recovered from the day's lows as the management clarified to ET Now that there is going to be limited impact of that suspension because those 3 products, their contribution to sales is insignificant. Let's talk about the question of the day then. Will the Nifty rally continue on accommodative Fed policy? That's the big question that we're asking. Mayuresh and Mitesh, good evening to both of you. Mayuresh, come to you. Do you think the rally on the index will continue? And part of it was in anticipation that the Fed would sound accommodative. And so perhaps, just like what the ECB's policy stance and the BOJ's policy stance meant for equity markets, that there would be a bit of a leg up for the markets in the near term?
Evening, Tanveer. I think what the ECB and the expectations from the Fed are largely on those lines as well. So if the policy turns out to be accommodative, as a lot of analysts on the streets are expecting, you might have a leg up onto the rally, specifically in terms of how the Fed policy and the statements thereof pan out. Clearly, even on the domestic front, in terms of how the government is stuck to its fiscal agenda, and clearly what has happened with the CPI, the expectations again running high on what RBI will do in its forthcoming April policy. Again, I think the larger picture is largely saying that corporate earnings and the capex cycle should revive, but I think the markets have just stated the fact that it's going to take a while for both these events to probably play out. So clearly, I think the market's in a consolidation mode, but again, I think the consolidation will be with a higher bias.
All right, Mitesh, your sense of the charts. The last hour rally was fueled by short covering. Is there enough proof to go long in the market from here?
Yeah, I think, market to me is still doing a range. We've seen the entire last 8 or 9 sessions when the Nifty has kind of remained in a range of about 7,400 to about 7,550. In that sense, it was kind of a bounce back from the lower end of the range. I'm not sure that, we have an immediate follow-up, but I think the overall pattern and the indicator setup is slightly on the positive side. So I still favor an upside breakout. And once we start sustaining above 75.50, then I think 76.80, 7700 looks like to be the next logical target. The bank nifty should lead the charge. A lot of banking stocks have given breakouts today, so I think I'm assuming that the bank nifty should be the one index to pull the overall nifty up towards 7550 and maybe result in some kind of an upside breakout above this range.
Okay, let's drill it down to specific names in the session, and let's start off with an ET Now exclusive, which was Anu Pharma. The stock was in focus as the European regulator suspended certificate of suitability for 3 products. Bipin Shah, MD of Anu Pharma, told ET Now that the sale of these products in Europe is insignificant, hence does not see major impact due to this move. The stock recovered from the day's lows, as you can see, went all the way up to almost 230 before closing higher by about 1.5%.
Sale of this product in Europe is very insignificant, less than even 3%. So there cannot be any big impact because we are selling the rest of the world market, and India also is less than actually 6 crores per year. Right? We'll have to call them for re-inspection to restore within 6 months maximum. But this will not have any impact on not a significant impact on top line, bottom line, etc.
In pharma, Mayuresh, that there's been enough and more news from a regulatory perspective. Lupin also, yesterday tanked on the back of the news in Goa, the Goa plant being inspected, and there being some, observations essentially on pertaining to the standard operating procedures at those plants. Quota came out with its note on Lupin today saying that they see 10% downgrade for FY17 consensus EPS estimates on their diabetes drug, which could peg back earnings. Both these stocks, I know Anu is a smaller name, but how do you look at the stories unfolding for both these names under the FDA scanner?
So again, I think Anu is not something that we covered, so very difficult to give a call on that one. But on Lupin, whatever has come out of the observations, if the observations are on the stringent side when it comes to the good manufacturing practices norm, and if there is a strict violation on those fronts, you might see some amount of earnings cut come through. But I think one must really understand what has happened with the FDA observations. Having said that, our own estimates suggest an EPS of around 65-66 odd rupees, and if there is some stringent action on these counts, specifically on the Goa plant, you will definitely see some amount of downgrades happen on the EPS front. When it comes to their core business, the OC formulations business has been doing extremely well, and again the expectations are of the top line increasing on that count itself to around $100 million odd. The branded sales as a percentage of total top line is expected to grow to 30%, and it's got a first mover advantage in Japan through its subsidiaries, where again I think there is every potential of a 14 to 16 billion odd dollars kind of generic off-patent drugs over the next 2 to 3 years. So I think the pipeline is quite strong when it comes to the generic drugs in the US market. What really happens with Goa plant and the developments thereof will be key. And again, I think valuations even at the current juncture, in our opinion, slightly on the higher side, which will act as headwinds to the stock. So clearly we're still maintaining a neutral onto the stock, and everything would hinge on what kind of observations are actually coming out.
Okay. On the charts, Lupin, Mitesh?
Lupin, had a big breakdown yesterday with a negative gap and then hit the levels of around 1720, sub 1700 levels, which is where the stock has taken support twice in February and bounced back. But overall, I think the trend has been downside with this gap breakdown, which we saw on Tuesday. My sense is that I think, a pullback to about 1770, 1780 might happen, but I think beyond that looks very difficult for the stock to go, and eventually I think it should break 1700 levels and head towards 1650. So I'll still be negative, try to look for shorting opportunities once the stock completes the pullback and, again gets into a negative mode on the intraday charts.
Okay, the other one was Eicher Motors, and CLSA downgrading the stock to underperform from buy, cutting the target to 20,400 from 20,900. Everybody who's been tracking the stock knows the story, the relentless rally that the stock has seen. And part of the story that CLSA is pointing out is that the stock is priced in the strong Royal Enfield outlook, even, the kind of upside that will come in from export sales. I'll come for a technical view to you, Mitesh. How are you looking at Eicher now, falling 4% in trade?
Yes, again, some kind of a breakdown has taken place. While the stock has come to important support levels of around 18,700 levels, I think, today's fall has seen some indicators give negative crossover. So I do expect eventually 18,700 to be broken, and I think we should possibly be preparing here for lower levels. maybe close to about 18,000 to about 18,050 is where I think the stock is heading towards.
Bosch, on the other hand, and Credit Suisse put out a note upgrading it to an outperform from underperform, raising the target to 22,500 from 15,300. So a big upgrade coming in there. And this one is likely to be a beneficiary of the government's commitment to tackle pollution. Mayuresh, is that your view too?
So again, it's been a long-term story, Tanveer, and the conviction remains with a stock like Bosch. Though I think the diesel sales have disappointed for the company in the quarter gone by. And again, I think the blip in EBITDA margins that you probably saw was because of the one-time relocation expenses that it suffered at its Bidadi plant. But having said that, probably I think if you're looking at its core business operation of fuel injections and nozzles, it still contributes significantly to the top line. The auto industry contributes significantly of around 87%, and the margins thereof have been extremely healthy at 17.3, 17.5%, which the company expects to maintain going forward. So clearly the different business verticals within the auto segment itself are holding up pretty well, and I think the EPS cuts that we're probably assuming are more to do with the kind of downtrend that you're probably going to see both in terms of volumes and realizations specifically for the diesel segment. But again, I think it's a larger view that we're probably taking over the next 4 to 5 years. Investors holding onto the stock should continue to hold on to a qualitative stock like Bosch.
Okay, Mayuresh, would want your immediate view on this developing story which ED now broke in the last hour of trade today. HCL Tech might be looking at acquiring Geometric and they are going to be talking about signing a binding agreement this week itself, completing final due diligence for acquisition, company to buy out 38% of promoter stake in Geometric. Transaction likely to happen at 210, 220 rupees per share. If you could just play out those graphics, because this was a big ET Now exclusive. And the transaction is likely to trigger 26% open offer in Geometric. We just want to remind our viewers as an alert that Rakesh Jhunjhunwala, marquee investor, holds about close to 19% stake in Geometric Software. Your call, because the stock moved up a mighty 11% in the session at 200. You're talking about perhaps a 5 to 10% premium from these levels still, Mayuresh.
So again, very speculative at this point of time, because not really sure on what kind of valuations, if the deal is going to happen, But again, I think our call largely has been that HCL Tech and Infosys still appeal to us from the large cap IT names. The kind of services that Geometric has to offer, whether it's PLM or engineering services, I think that complement very, very well with HCL technology. So if this entire thing has to go through, I think it will be positive, because the synergies from this deal will be reflected quite positively in terms of how valuations will pan out for HCL Tech. However, I think it is highly speculative at this point of time. And if we just go by data points on what the core operations for HCL Tech have been, I think we're just looking at standard numbers right now. We're not looking at anything apart from that. And based on the standard numbers, we still feel that dollar and rupee revenue growth can be in excess of 30%. You're still looking at EBIT margins which are very, very healthy for HCL Tech. They're doing transformational deal wins in excess of $1 billion every quarter. So I think that is them in good stead and would continue to do so, along with valuations of around 14.2 times FY 17, which still appear very, very attractive to us. So apart from all these deal talks, our own take is that the performance of HCL Tech has been extremely solid and robust, and our hope is that over the next 12 to 18 months it will continue to show that outperformance when it comes to operating performance.
Okay, we'll take a short break, Mayuresh. Thanks for adding your insight. But as we take that break, the big discussion point in the markets is how the Seventh Pay Commission transmission would lead to a boost in the consumption stories, particularly increased demand for consumer durables and for fast-moving consumer goods, which is FMCG. Harsha Upadhyay of Kotak AMC is betting on urban consumption on the back of this theme.
The market is going to stabilize somewhere around current levels, at least for some time. There will be a consolidation phase. And then depending on the earnings trajectory and the monsoon and maybe the pace of reforms in domestic context, markets will take further direction. If you look at our overall portfolio stance, we have been underweight on IT sector, but we do have a couple of names in our portfolio, and that is where we feel that at least there is some steadiness in terms of the earnings growth going forward. Unless the valuations become really, really attractive, we will not be looking at going overweight on the sector. We continue to remain underweight in the pharma sector, and I think most of the bets are in the urban consumption area. So autos and some white goods. These are the areas where we have some position, and also we believe retail-focused private sector banks will be enablers for this consumption demand that will grow, and hence we are also positive on some of the retail-focused private sector banks.
An exclusive and easy finance option for e-commerce sellers. Introducing SB.
Pranay joins in with what to expect from the biggest cue that will impact trade tomorrow, which is the Fed's rate decision overnight. Pranay, tell all what to highlight.
Well, yes, Tanveer, in 7 hours we'll have the outcome of the Fed meet where the most important thing would be the commentary, because this time we are expecting the Fed to sit tight on the rates, no movement over there. What will be important to watch from their statement would probably be the inclusion of the fact that risks are nearly balanced for them, as a result of which the next rate hike will not be too long away. Perhaps the earliest indication is expected that the next rate hike could be in June. However, you cannot rule out any action in the April last week meet. So besides that, the markets have been underestimating the Fed officials' tolerance when it comes to the tight monetary conditions, because so far we've heard that rates will not be raised more than 2 to 3 times. Once has happened, the bond markets in US are indicating that the Fed rates are going to remain soft and not steep. So we'll watch out for some commentary on that as well, as to whether the monetary conditions are within their comfort zone, and the recent incoming macro data when it comes to housing, unemployment, payrolls as well as jobless claims is all that at their comfort level for them to move in June or not.
Thanks, Pranay, for that. Let's hear out what market experts believe the Fed would say and do later tonight.
We do expect, though, that the Fed will resume its hiking cycle from June, and we do actually currently forecast 3 hikes for the rest of the year, so June, September, December. There have been concerns on growth, and that probably keeps the Fed on hold on the current meeting.
I think markets would certainly be very surprised if they did decide to raise rates today. So I think it feels likely that they won't. To be honest, we're expecting much like the market now in terms of, if you look at Fed funds futures, markets now expecting mid-year rate rise, and that's more or less where we would expect to. In terms of the tone of Chair Yellen's statement afterwards, I wouldn't want to second guess that too much, but certainly the economy isn't giving her or them the sort of leeway, in our view, to be too dovish in that speech, and I think that's worth bearing in mind.
Really not expecting them to do a whole lot, and that's probably a good thing at this point. So certainly it's going to depend a whole lot on the press conference, what kind of tone you get, what kind of indication we get in terms of when the next interest rate hike is going to be. Because really all we've done is giving ourselves a bit of a breather, perhaps 3 months, if we think the next hike is probably going to be in June. So a little more time for the markets to get used to what is still a fundamentally hiking federal interest rate path.
In the United States, as we had a strong dollar policy, the economy is quite weak and the debt structure is very weak. So going into election, I would actually expect that you're going to see some more easing measurements fiscally and monetary in the United States, and that's going to bring most likely the US dollar down a bit.
Okay, let's drill it down to specific stocks and strategies for tomorrow's session, given that the biggest cue would be the Fed's decision. However, it'll all trickle down to individual stock trades. Mitesh, come to you. What are the strategies you would recommend?
I have, in fact, 2 banking names on the list. The first one is Axis Bank, which appears to have cleared an important zone of levels of around 420. So that's a buy with a stop at 418 or just below it, and look at 440 as the target. And ICICI Bank is something which we've been positive for last few days. Today, towards the end, last 1.5 hours, we saw strong intraday buy signals. That's a buy with a stop at 218.5. And look for targets close to about 238.
Okay, Mayuresh, your bet is in Blue Star?
Well, yes, Tanveer, and our own take is that with the room air conditioning having 48% of the share of the overall top line, the margin should show significant improvement over the next 2 years, close to that 7.1% mark. We're envisaging 11% increase in top line overall to reach that 3,977 odd crore marks. ROEs in excess of 25-26%, and valuations not steep at this point of time. So Blue Star is something that I'm liking at this juncture.
Thanks, Mayuresh and Mitesh, for joining us today and giving us your perspective on the markets, your insights on trade, helping our viewers with investment and trading ideas for tomorrow. We'll catch you with the markets then tomorrow morning at 8 a.m., dissecting all global and local cues for the benefit of our viewers to help you navigate the trade. That'll be 8 a.m. tomorrow morning. For now, thanks very much for watching Markets Tomorrow.